while many people are starting to crave Tesla stock SLA. Early investors like Ron Barron are holding on to their shares even more tightly, owning a significant portion of Tesla stock. Ron Barron predicts a 30-fold rise in the company's value. Renowned investor Ron Barron has a strong outlook on Tesla. Today, we examine some advice that Ron Barron has provided on Tesla shares and how best to use them. For tonight, why does Barron think there will be a 30-fold gain in Tesla stock? It says Tesla poised to become the Apple of the car industry. In today's video, we'll address these queries as well as others. Ron Barron discussed a number of significant facets of Tesla's operations and the reasons that long-term investment in the company's shares is worthwhile. He spoke about the most significant immediate risk that he believed Musk's companies faced. One of Barron's primary long-term investors in Tesla is currently Barron Capital, his investing company. The investor claims that the corporation currently owns about 6 million Tesla shares. Barron is the world's greatest Tesla bull, with a staggering 41 of his largest funds invested in Tesla shares. Even after cutting back on his holdings, this significant wager has almost tripled Barron's net worth since March 2020. Specifically, 2 of Barron's 17 funds hold all a sizable position in Tesla. The $7.03 billion Barron Partners Fund, co-managed by Ron Barron and his son Michael, saw a return of around 150 in the previous year. For over 47 of its assets, by the end of 2020, were owned by Tesla. The shares made up a sizable 41 of assets even after selling up a chunk of its stake in the business. Co-managed by Barron and his son David, the $671 billion Barron focused growth fund generated a 122% return in the previous year. As of March 31st, its stake in Tesla has decreased from 39 at the end of 2020 to 32. Barron goes on. Tesla is the biggest investment I've ever made. As the publicly available information, Barron funds ranked 12th among the top 50 institutional shareholders of Tesla by the end of 2020. Set on with 12% of its whole portfolio committed, Barron funds had the highest percentage. Other well-known investors include the Edinburgh, Pennsylvania-based Baillie Gifford, which owns 11 of Tesla, and Cathie Wood's ARK Invest, which owns 8.3 of Tesla. We examine the explanation behind Ron Barron's expectation to hold on to his Tesla shares for at least the next 10 years. Since 2014, Barron's Capital has owned Tesla stock with an average cost at purchase of approximately $43. The stock has increased since then by almost 20 times, and if Tesla achieves $1,300, by about 30 times. The market value of the shares just surpassed $1 trillion. Even yet, Ron Barron, being as intelligent as he is, has said that his company will probably stay invested for at least another 10 years and isn't considering selling. Before opting to invest, Ron Barron has also said that he spoke with Elon Musk and did extensive research on Tesla for years. Thus, he did not make the decision to invest in Tesla by accident. Barron's decision was met with opposition from many people who said it would not be successful. We were intrigued at the time what these folks thought after learning that Ron Barron had made $6 billion from Tesla stock with an average cost of about $43. Many predicted that it wouldn't succeed since Elon Musk wasn't concerned in making money right away. To those who disagree with Elon Musk and who genuinely hope for a large return in the near future, we have this to say: you want to win small. I want to win big. Elon Musk must have told himself that, and Ron Barron likes to invest in companies that are prepared to forgo immediate financial gain in order to achieve greater success. Ron Barron makes his investments by funding companies that make internal investments. Tesla has created new businesses, expanded its vehicle lineup, and built additional facilities throughout the world with the money it made, is all you could say. Barron brought up the 2020 Tesla Impact Report throughout the interview. He said that after reading this report, you would decide against selling your Tesla. Elon Musk is committed to making sure that mankind survives. According to Barron, this is because private space exploration is progressing and electric car development is happening quickly. The 2 most well-liked businesses for engineering graduates seeking employment prospects are now SpaceX and Tesla. Elon Musk, the billionaire investor, said that the biggest risk to Tesla investors going forward is Musk's health. Without Musk, Tesla and SpaceX would not be where they are today. He stated he's in good health, and I hope he stays that way for a very long time. What would happen to Tesla if Elon Musk had a negative outcome? Since the company's founding in May 2010, Tesla stock has increased significantly, and Elon Musk has gained the trust of many investors. Risk factors influencing a share's price are investors' opinions on the issuing company. Nonetheless, one of the most crucial elements affecting a stock's price is expectations regarding the company's performance. The demand for Tesla shares on the stock exchange is influenced by analyst forecasts regarding the profitability of the company. The market worth of a company can also be increased by its assets, such as a patent, real estate portfolio, or sales exclusivity. However, there's a lot to consider because innovation also has a big impact on a business's performance when it comes to risk. Interest rate expectations and level have an impact on stock market pricing and estimates. Ultimately, low interest rates encourage investors to take on more risk in order to increase returns and facilitate their access to the stock market. Barron also discussed Musk's impact on Tesla and SpaceX. He thinks that without Musk in charge, the businesses might not perform as effectively. He also discussed the CEO's work ethic and his Boca Chica tiny house, which we have already covered in one of our previous movies. This is what will happen to Tesla's stock price and operations if it has to become the Apple of automobiles. Analysts project that on average, Tesla will make over $50 billion in sales in 2021, with its automotive division accounting for more than 85 of those sales. If and when electric vehicles account for 95% of all new automobiles sold in 2035, which is still a very huge estimate to make, Tesla will have the same 16% market share as Apple currently holds. It will produce 22 million automobiles and light trucks and bring in over $1 trillion in revenue, which is a staggering amount of money. According to analyst estimates, Tesla is expected to earn over $10 billion in net income in 2021, with over $1, 2 cents billion coming from regulatory credits, and that Tesla would make about $250 billion in profits in 2035 if it could achieve the same 24% net earnings margins as Apple has now. We are, after all, discussing 15 years from now. Additionally, as Tesla grew from producing 0 to 1 million cars, the company established factories in Shanghai, Fairmont, California, and soon Austin, in addition to gigafactories in Nevada, Berlin, and Austin that produce batteries. Ignoring the reality that Apple is a company that does more than simply produce smartphones, let's just assume that Tesla will become the Apple of cars. Over $150 billion iPhone sales were recorded in the first 3 quarters of 2021, making over 55 of total sales. Additionally, sales from the services sector were reported, encompassing sales from digital content, Apple Care, advertising, and other categories. Assume for the moment that the iPhone was the primary source of revenue. So iPhone accounts for roughly 65-70 of Apple sales, meaning the company will likely make a sizable profit this year from the sale of Macs, iPads, wearables, and accessories, almost $110 billion. Thus, even without the iPhone, Apple's business is still doing fairly well. Therefore, we have to presume that Tesla will need to include comparable additions in upcoming products if it is to become Apple. Furthermore, we cannot overlook the fact that mobile advertising and app revenues, which are primarily reported by Apple in the service sector, previously indicated, account for the majority of Apple's earnings and device sales. Finally, for Tesla to produce anything similar, we have to think that it would produce something unrelated to the auto sector. This goes beyond its app store or over-the-air updates. Although Tesla leads the industry in the manufacturing of electric cars, it is uncertain if this will last in the long run, particularly given the number of other businesses that are also making significant efforts to produce electric cars. There's no denying that electric cars are the way of the future and that their market share of new cars is rapidly growing. On the other hand, the value of security in a broader sense may increase or decrease depending on how markets evolve generally. For instance, even robust and promising values were driven downward in gloomy markets like those experienced during the 2008 and 2011 financial crises, even if there was nothing fundamentally wrong with them. Do you think Tesla's stock will rise with those figures anytime soon? Please leave a comment below.